Bismillahirrahmanirrahim. Assalamu alaikum. Welcome back to Small Talk. I'm just going to record a very brief update on the stock market. Last week was a wonderful week in the stock market. Everything has been rallying. In fact, for past week and a half since the tariff war between China and US has been de-escalated. Stocks have been rallying, and we recently noticed that there was a power trend in the market, which means that we should be heavily invested, or rather fully invested into the stock market, into the most aggressive growth stocks to hold them longer term for bigger gains. But that, having said that, that doesn't mean that we should uh, be chasing the stocks who have already been aggressively running and have higher valuation, because the pullback will be very significant as well. So some of the stocks, for example, Broadcom, Meta, those are good companies to buy into right now. They're at the buy point right now where you can see that the growth will be immense. Some of the other stocks which have been running pretty crazy, like Palantir, for example, has already ran so much. Some people are of the opinion that that is going to be the next Nvidia, and we know Nvidia pre-split was over $1,000 per share, and then now Nvidia had stock split, which brought the price down. So, if that's the case, then there's still a lots of room to run for Palantir. However, Palantir is already at very high valuation. So if it pulls back, the pullback is going to be heavy. And then not everybody can take that much red on their portfolio. So I would just say be very cautious. However, the power trend indicates that it's time to invest heavily, or it's time to be fully invested in the stock market. And usually when that trend happens, it usually indicates that there's going to be the growth stocks are going to do really well if you hold them in the longer term, and you can achieve much bigger gain from them. Friday afternoon, stock market crashed suddenly after close, or almost close, near close. And the reason being was the US credit was downgraded, which is not a big deal. We all know the US has heavy debts that they have to pay. They're paying high interest rate on the debts that they have accumulated, especially during COVID when Federal Reserve was bailing out the US economy. They obviously have to pay very high interest rate. So the downgrade is not unexpected. It was expected, but of course, as we know, the stock market reacts to every little thing and every big thing regardless. But does that mean it's going to keep going down? Usually, when these kind of credit downgrades take place, those are buy the dip opportunity, in my opinion. And that's a good time to buy those good quality stocks which you have been loaning to get into, but you missed the boat. Now, if the stock is down 5, 6, or 10%, it's a good time to get in. That will give you at least 10% or 5% or 6% upward in a short term. And then if you hold them longer term, you could maximize your gains. So today, Sunday afternoon, the futures look a little bit more sideways kind of, but that does not indicate that the stock market is going to be sideways or going to be down tomorrow. Monday morning stock market has its own mood and mind depending on what news comes out. During the weekend, of course, the analysts and the investors may have processed this credit downgrade, and they must have realized it's not a big deal. Usually when these kind of reports come out, yeah, the stock market does go down, because investors, when they have invested billions or trillions of dollars in the stock market, they're quick to pull their money out because they don't want to lose all the gains that they've accumulated in past week or week and a half or month, so to speak. So they want to take the money out first, and then they think and process the news to see if this news is going to have an impact on the market or not. And once during this weekend, I'm sure they have already done their calculation, and they have checked the historic data, and they have seen that those kind of reports are usually not a big deal, and they're usually buy the dip opportunity. Come next week, I think the investors will jump back into the market, which is going to rally the stock market again. That's my opinion. Again, not a personalized financial advice. The other thing I wanted to talk about was Trump. He has been closing deals with lots of the countries across the world. As far as the tariffs are concerned, he said, however, we'll be able to close another 20 to 22 countries deals within the next few weeks, 2 to 3 weeks. He said US does not have the capabilities or capacity to close the deals with all the nations, and that's why it's taking them some time. So China was a big deal for us because lots of our uh, parts are manufactured in China, and lots of our industries depend on China manufacturing. And the deal with between the China and US has sent a breath of fresh air in the stock market and in the economy as a whole. People like you and I, the small investors who have pennies in the stock market, we also felt good when our portfolio is growing every single day by a few $1,000s, which kind of gives you a nice feeling. Tesla, I'm always a Tesla bull. Sometimes people are so bearish on Tesla, and I've done some research on it. Usually, when you are a bear in a bull market, or especially a bear on a company which has a very bullish outlook and has a bullish pipeline, you just come across as very smart. It makes you look like as if you can analyze things way better than all these bulls in the market because you're looking into the much more in-depth details of the company. But that's not true. It's just some people are scaredy cats. They're not willing to take risk at all. Stock market is a risky business. We all know this. You can lose money in one day and you can make money in one day, but that's the name of the game. However, some of these large companies, for example, Uber, Meta, Google, Tesla, um, Amazon, these mega seven companies, they are there to stay. Nothing is going to happen to them overnight unless something drastic happens and this world just ends. That's a whole different scenario. But other than that, I think stock market is, these companies are pretty solid. They have good balance sheet. They have good lots of things going on in their pipeline, and they have very great outlook that we are pricing in. So these companies, small hiccups, small pullbacks are going to take place, and they're healthy. You want those pullbacks to happen because when the stock pulls back, um, it takes some new investors along because they're waiting on the sideline to see if the stock drops so they can buy in. And once that new inflow of cash comes in, it pushes the stock to the next levels of heights. And you want those pullbacks because that's what makes the stock grow much faster. If there's no pullback and stock is constantly going sideways or going up, which Tesla has done in the past 2 years, it was constantly going sideways because it wasn't pulling back. No bad news was coming, which didn't give anybody an opportunity to get in. And for 2 years, Tesla stock has been going sideways, which was kind of sad to look at it because 2 years in the stock market is a long time. And usually people hope that they'll make lots of money in 2 years. But if you were invested heavily in Tesla, you didn't make anything in Tesla. Whereas if you were invested in Palantir or Nvidia, on the other hand, or some of these highly growth stocks, which Tesla is still a growth stock, but it's a much larger company than all these Nvidia and Palantir, etc. Um, then your wealth probably grew 10x or 5x or even more. But it's a stock market. We have to take those chances. You obviously cannot put all your money into very high risk equities. You have to balance it to put into some of those companies which are slow growth companies, but they're solid companies. You know that you won't lose. Yeah, your profit isn't as much, but your loss will not be as much either. Whereas these growth companies, your profit is significant, but if they pull back, your loss could be significant too. So you kind of have to balance out your portfolio. So I've always been a Tesla bull, back to my original story. And with their FSD coming up, which they promise is going to be in June. I mean, their robotaxi, which I knew it's a lie. It's not going to happen in June because we all know by now that Elon Musk will just throw out a timeline, and he never fulfills his promise by that timeline. That doesn't mean it's not going to happen. It will happen, but a little later. That's all it means. But by the end of this year, most likely we'll have robotaxis, somewhat FSDs, maybe some controlled version of FSD as well. So they have lots of things in the pipeline, and they're humanoid robots. Now it's more like an AI company than just a car manufacturing company, which is why the stock market has started picking up again. People have started to have their confidence built back into Tesla. And the other reason why stock is going up because Elon Musk had promised that he's going to limit his time at the White House. Plus, Trump also announced that he may be ending his special employee term at the White House by end of June or beginning of July, which kind of also was a good news. So all those things are being priced in right now. But Friday everything crashed. Uber, Tesla, Palantir, even the small cap stocks were all red afternoon because of the credit downgrade. But as I said in the very beginning of this video, those kind of events and those kind of reports are usually by the dip opportunity. And as I said, investors pull their money out first and then they process the news after because they don't want to lose their gains. And people like me who may have like a few $1,000s invested, our gains aren't that much. But if you have invested millions and billions of dollars in the market, that 3-4% pullback could give you a loss of millions of dollars as well. And those investors, large institutions, don't want to lose that money because they have their clients to report back to. They have to complete their monthly, quarterly reports. They have to attract more customers. So they have someone to report to. Whereas us, the retail investors, we don't have anybody to report to. So we kind of go through these hiccups, this pain, this small turbulence. We just go through it and we just sit back and tight and hope that our stocks will recover soon, which they do for the most part. Sometimes they do go to zero. I have had few of my stocks went to zero and I lost all my money that I had invested into it. But as I said, that's the name of the game. That's stock market that we're talking about. That's why I always say not a personalized financial advice, and please don't invest any money in the stock market which you're not willing to lose. Because is it possible that you could lose all of it? Absolutely. Is it possible that your money will 10x? Absolutely. So that being said, be very cautious. It's high risk, high reward industry, high risk, high reward investment that we put our money into. So we have to be very cautious. Uber has been flying. My husband's all-time favorite because he's heavily invested into Uber, and not willingly. He's heavily invested in Uber because he worked for Uber Technologies at their autonomous when they started their autonomous cars business, which they eventually sold to Aurora, I believe. He was one of the main founder of that autonomous car part of Uber Technologies, and then they gave him lots of shares as equity because he was the executive in the company. So, and anyways, he's heavily invested. So whenever Uber stock goes out, he's excited and he's happy because he's this many times more rich than he was yesterday. But Uber has very good pipeline. They have announced so many mergers with so many companies. They're buying lots of these food delivery companies. They're merging with some ride-hailing company in India. They are coming down to the same level as those small companies who were not charging a fee, rather they were charging only one-time fee, and then that's it, people could use their app. So they're doing lots of these things. They're also working with server robots. So instead of having human being driving and delivering their food, the robots will deliver the food, which is going to eliminate lots of these accidents, wrong delivery of the orders, etc. Because robots are obviously more efficient than human beings are. Also, they're working on. I think they're working on. They're buying a fleet of FSDs, which I was reading a report the other day, and somebody said, believe it or not, half the time Uber is being attacked because of their drivers. Maybe the driver offended somebody, or maybe the passenger sitting in their car didn't like the behavior of the driver, and those kind of rumors spread around. And at the end of the day, Uber as a company suffers. So if they buy a fleet of FSDs, that is obviously going to eliminate that problem, which shows growth for Uber as a company. And they have a very huge network of users. Their app is like used widely across the globe, and nobody can compete with Uber as far as the user is concerned. So they have the upper hand, just like Tesla has the upper hand in electric vehicles. Uber has the upper hand across the world on these ride-hailing car companies. That being said, Uber's growth makes sense to me absolutely because it's supposed to grow. And recently, the analysts have raised their price target for Uber. I think the highest one is $115, which is pretty good. And I think that it's for the end of this year, which I can see it getting there very, very soon because um, uh, it's already running over $90 or $92 as we speak. Bitcoin hit $105,000 on Sunday today afternoon, whereas it closed at $104,000. If you watch my videos regularly, I told you about 3 weeks ago that I can see Bitcoin hitting $110,000 in the near future, and then it may have a pullback. It may not, but in my opinion, it will have a pullback, and then it's going to run again to 200 to 250, $260,000 maybe towards the end of the year. Let's see if I'm right on that. Do I have Bitcoin? No, unfortunately, I don't. And I will be very honest with you. If I don't own something, do I regret this? Yes, I do. But at the same time, I don't regret it because, as I keep saying, it's a very expensive digital asset. And I just didn't want to rush into buying it at $77,000 because what if it went down to $75,000, $65,000, and I'm like $10,000 in loss just that soon. So that was the risk and reward that I kind of had to calculate. And in my calculation, I was hoping that it will go down to $67,000 to $65,000, which it didn't. It would have hit that if Trump had not started its tariff drama. Uh, so that tariff nonsense was the reason why Bitcoin did not hit that $65,000 level, in my humble opinion. I may be wrong. There may be other reasons behind it. So Bitcoin is going to hit $110,000 in the very near future. Not so much next week, maybe by the end of May, mid-June, possibly, in my opinion. Palantir has hit its all-time high. It went all the way, I think, over $130, and then there was a pullback on Friday, as I mentioned earlier. Is Palantir going to run? Yes, absolutely. And if the report that I read is true, and they have done their analysis the right way, and they think it's a new Nvidia, then boy, sky is the limit because Nvidia was at almost $1,000 before they split their stock. So that means it's going to 10x from this point onward. Of course, not right away, but maybe next 3 to 5 years. So if you want to hold that long term, it's a possibility that will be your retirement right there. Do I have Palantir? I don't have Palantir. It went down to $74,000, and I was talking to my friend. I said, let's buy Palantir, and I checked my account. I didn't have any cash left, so I didn't buy it. Then I sold some of my stocks, which were doing fine, and I figured I could just take some money out of them and put into Palantir. But by the time I was able to do all that, Palantir had already ran up to $105,000. So at that point, I was like, I'm gonna wait. But then it just kept going. It just kept going to $130,000. Broadcom has reached to $228, I think, on Friday, if I remember it correctly. So it's a good time to get into Broadcom because Broadcom has very strong upside potential. And if everybody remembers their last quarter's earning reports, how they kept on going on their AI and their technology, and how stocks soared so much within a week, I think this earning report is going to do the justice as well. So it's and that stock is, I think, at a level where you can buy now and grow with the company in the next 2 to 5 years. And again, that could be your retirement as well. So what to expect next week? I think Monday stock market may be still a little down, or if people are smart, they will buy the dip because they got a huge dip past Friday, and stock market could rally. I mean, if I had the money, that's what I would do. I would just buy the dip and gain like 5 to 10% instantly, like within a week or so, because that's how much some of the stocks have lost Friday afternoon, between 5 to 7 to 10%. So that's a quick 5 to 10% gain within a week and a half, which is not bad at all. Usually S&P 500 grows, I think, 7-12% on average every year. So if you can gain 5 to 10% in a week or 2 weeks, you beat the S&P 500 by 1,000 times. So not a bad idea. If you have the money, not a personalized financial advice. think about getting into the stock market, especially into those growth stocks who have strong balance sheet and who are not on the verge to kind of go bankrupt, so to speak. You kind of get an idea when you look at their finance and their balance sheet, etc., and how much money they've made, or how much was their loss last quarter or last few quarters. That kind of give you a pretty good idea. You just have to do a little bit of research, a little bit of homework. Just spend 5 to 10 minutes to read about the company before you buy their stocks. That's what you should do. That will give you a pretty good picture. Of course, I cannot give you a personalized financial advice. My portfolio is very high risk because I believe in high risk, high reward, but not everybody has the stomach and tolerance for the high risk. That's why you have to work on how much risk are you willing to take. You can play very safe bets and put into these large indices, S&P 500 or NASDAQ, or maybe ARK Invest. They have very good stocks. They have mix of growth stock. Most of their portfolio is growth, but they have mix of growth and some of the solid companies as well. Chinese stock are going to do well because now that US and China is on kind of decent terms with each other, and they have de-escalated their trade war. I think Chinese stocks should do better compared to where they were in the past few weeks. So I'm holding Alibaba and Xpeng and Neo for, I don't know, since 2021. I bought them at very high price. So I am thinking about averaging down some of those stocks if I have some cash on hand. I don't have any right now. I'm going to sell some stocks next week, which are doing good. So take some money out of those and put them into these Chinese companies so I can recover it and then just kind of sell them and get my money out. That's what I'm going to do. But if you're a new buyer, I think those are good companies to buy now. They will give you 10 to 20% profit before the end of the year, so which is a pretty good growth on a solid company, whereas down risk is much lower, and the loss could be minimal as well. So these are the good companies to invest if you are a safe investor, so to speak, and not a person who's willing to take high risk. Anyways, those are my thoughts. That's my opinion, not a personalized financial advice. You do you, guys. I am just telling you what I think of the stock market. Still holding every single stock in Tesla. Still holding, oh my God, my portfolio has like 80 stocks in there, so I don't even remember half of them why I bought those. But most of them are doing decent. Some of them are red still because I bought them at very high valuation, and some of them, I think they're just gonna die. They're like dead stocks. They're gonna go to zero, or maybe I'll have to sell them at a loss towards the end of the year. But that's me. That's my stocks when I bought them, in 2021, because the market was rallying every day, and I was dumb enough not to sell them at profit at the time because I thought it's just gonna keep going up. But stock market doesn't keep going up. Lesson learned the hard way, and I don't want you guys to make that mistake. I hope this video helps. Please give my video a thumbs up. Subscribe to my channel if you haven't already. Be safe, be careful, and make some money. Bye.